What up, y'all? Welcome to episode 16 of Plug Talk Tuesday. Let's go. All right, so we're 2 days away from it being tax day. So I want to talk about a couple tips and tricks that I think that'll help you when you're doing your taxes. First thing that I want to coach you up on is prepare all year, right? When it comes tax season, we're 2 days away. It's not time for you to start hustling and bustling and figure out where did I work this year? Who am I waiting to get my W-2s from, my 1099s and all that stuff. Make a list at the beginning of the year of all the jobs that you worked. It's easy to stay up to date because you're not going to miss, oh yeah, I worked for this person or that person. Keep a list. If you know that you do individual contracting with places, make sure you have a list of all those places somewhere so that way you know who to expect a 1099 from. If you have a job that gives you retirement and you're able to get HSA write-offs and all other types of stuff, make sure you have a list of all of the things that you're going to need going into doing your taxes. It just makes it so much easier and it relieves the stress whether you're doing your taxes for yourself or somebody else is doing them for you. The more prepared you can be, the better off it's going to be. The second thing that I want to say is do them earlier. I completed my taxes as soon as I got everything that I needed. And this was the very end of January. And I also coach up my mentees to do the exact same thing. So by the time the IRS opened on February 12th, I had my refund by like February 20th. And the reason why I encourage you to do that is because one, you know earlier how much you're going to get, and then you can plan on how you're going to use that refund, how you're going to invest that refund, where are you going to put that money at. And then if you have to pay, you also have an awareness of how much you're going to have to pay as well. Hopefully you don't have to pay and you have the ability to get a refund so you can invest that money in other ways in the future. But the sooner you do it, the better off. Why wait? When you can knock it out in January and February, why wait until April and put that much more pressure on yourself? Number 3, I intentionally said plan how you're going to invest it. This is important because this is money that you're getting back and it's your money in the first place. So see it as an extra set of investment, whether it's investing in paying off extra debt, whether you want to invest in a vacation, whether you want to invest in, some properties, or you want to invest in the stocks, regardless of what it is, have a plan for this money so that way it doesn't just come and then you just blow it haphazardly. Like, know what you want to do with your funds. Have a plan for your money. Number 4, if you do your taxes yourself or you have somebody else do them, be in the know. Ask questions. What can I write off? What can't I write off? Especially if you're a sole proprietor, an LLC owner, a business owner in any way, shape, or form. Know what you can write off. There's nothing like being able to do your taxes yourself or being able to watch somebody else do them and having an understanding of all the different things that you can write off that the government in Uncle Sam, somebody's uncle, allows you to write off, that allows you to be able to get a refund back, especially if you're somebody who holds a W-2 and has LLCs or properties like myself. So because I'm able to do my taxes so early in the year, in January, early February, I now know going into the rest of the year 2021, how I'm going to operate through the rest of the year. Even though some tax laws might change, majority of them are most likely going to stay the same. So I know exactly what I'm going to be able to do and what I'm going to be able to write off. So the way I maneuver as a business owner in the next year, this year, is based off of the things that I saw I was able to write off in the year prior. That makes sense when it comes to my houses, being able to write off these things, when it comes to my car and my miles and my eating and my travel and all of those areas. I was able to figure out that much more based off of me knowing what I could write off the year before. So it's really important for you to be able to do that. If you do it in January, now you can start January, February, you have the whole entire year. But if you don't wait until April to start keeping good records or finding out, now you already missed 4 months. You don't want to waste 4 months of being able to miss out on all these possible write-offs that you could have. So make sure you're getting a good understanding of what you can do and how you can do it. Number 5, take pictures of receipts, scan receipts. If you got an iPhone, you need to do this. The second, if you are a business owner in any way, shape, or form, the second you go out to eat and let's say you have a conversation with somebody, take that receipt when you have a conversation with somebody about business in any way, right? Like you can write off that as a business expense. Or let's say you're doing, you buy a product for your job, you buy some equipment, you pay somebody, whatever the case may be, is get that receipt, pull out your iPhone, scan it, keep a note on your phone that says receipts 2021. put the date and information at the top, scan it, throw it away. So now when you go in to do your taxes and you're preparing at the end of the year and you're preparing for January, February to do them again, you have a list of all the receipts that you need. Yes, there are plenty of other tools and things that you can do out there, but I'm just trying to give you the bare bottom minimum way that can allow you to keep your receipts. You just need the picture. You don't have to actually keep all the paper, but if you want to, cool, do that too. But you can also just put it in a note and call it a day, and it'll save yourself a whole lot of money and headache when you go to do your taxes next year. So those are my top 5 things that I think every owner needs to know when they are doing their taxes, whether it be themselves or somebody else doing it. Prepare early. Get them done early. Save your receipts. Keep a list of all your jobs and all your transitions. Prepare yourself to do it, and then have a plan for your money. When you have a plan for your money, things just end up working out the way that you want them to rather than the way that they want to. It's so much better for you to have a plan for your money, because failing to plan is planning to fail. And then another dope thing that I'll say, this is a bonus tip and trick, coming into the rest of the year, buy every single thing it is that you think that you're going to need for your business. Again, save the receipts so that way you can have them going into next year and you can write them off this year. So I know December is a long time from now, but make a list of all the equipment and needs that you need for your business, and then keep a long list and plan when you're going to buy them. Maybe you need to use that refund check to buy stuff to feed back into your business, and then you know that you can write it off again. That's the whole point. The government is set up in that way. I'm not a tax professional, so make sure you tap into a tax professional, an accountant, when it comes to that, to making sure that you're able to do these things the right way. But these are the basic, bare bottom minimum things that everybody should know when it comes to preparing the taxes, because everybody got to pay them. So Plug Talk Tuesday, thank you for tuning in. Let's grow.